Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 24th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a lot to go over. Overnight, we had the Brexit vote. Today in the U.S., we have some economic data that really was lackluster at best, and we had the core durable goods orders come in at negative 0.3%, was expected a positive 0.1%, and then we also got just the durable goods orders, which adds in some of the more volatile things in that overall index, and it came in at negative 2.2%, was expected at negative 0.5%. We also got University of Michigan consumer sentiment came in at 93.5, was expected 94.2. Then we had the Brexit vote overnight, so a lot of people didn't get a whole lot of sleep. Happy Independence Day to Britain. Anyway, the reason why I'm saying that is because Britain has decided to exit the European Union. The vote was pretty tight for a while there. The market overnight was very volatile. A lot of traders didn't get a whole lot of sleep. Crude oil also getting slammed today. Came up and tested that $50 a barrel area. Came up almost, was at $50.50 or something like that, or $50.45, and then pretty much got slammed, as you can see here, down about $2 on the day, but off of the lows, as the equities have rallied off of their lows as well. You can see here NASDAQ/NQ down 140 points, right there at the value area. It's fine, that's where it's going to find comfort right now. I don't really see us moving a whole lot around from there, but as you can see, it was down much lower. The overall low on the day was 42.34, and that was right off of the open, but we've kind of rallied off of that since then. As you can see here, E-mini S&Ps down over 50 points, almost 60 points on the day. The overall market's, taking back almost half of the losses they've seen from the open. We'll look at the daily chart with the breakdown on the 15 minutes. And basically, the market opened up, rallied up when there was basically the thought that Britain wasn't going to exit. But when the votes started coming in and the news started coming out, the market really started getting slammed. As soon as somebody would vote to stay in the union, like this is right around when London basically said they voted to stay in, the market really rallied up. But then when the overall votes finally were tallied, the market really got slammed to the lows of the session. And then onto a couple of other things. Gold, another thing, was up close to 100 points at one point in time. As you can see here, 1362 was the high, and that is about 40 points higher. So that would have been right around 97, 98 points on the day. So that as the equities were selling off, it's a flight to quality with gold. Plus, with Britain exiting, a lot of people were really worried about their currencies, and they were flying to the precious metals for a safety type of currency, if you will. So a lot of that going on today, where people are very worried about their currency, and the safe haven for that would be in gold. But having said that, yesterday I had a feeling that this was going to happen. I've talked about this a couple of times in the daily market commentaries, that I wanted to get out of this gold because of this whole Brexit thing. I didn't want to be in any of the bank stocks either. They're getting slammed today. About the only thing up is Altera and Walmart for the most part today. But with gold yesterday, late in the afternoon, I decided to take this off. You know, I've been looking for the opportune time to do it. It didn't make a whole lot of money on this trade, but I was short the SEP 142 puts, and then long the July 120 put. So when we got down there right to that 120 put area, that's when I decided to take this off. I originally put it on for, paid $19.40 for it, got out for $19.50. So pretty much a scratch for all intents and purposes. That wasn't not a big winner at all. Then, as you can see here, CSCO, I wanted to take off a lot of these short deltas that I had on where I was long some puts. Just wanted to thin some of that out a little bit, because at the end of the day, I don't really see us getting slammed for the next several days. I think we could really see it maybe trade sideways, or maybe even come back a little bit. So in CSCO, it came down to right there at my 128 puts that I was long. I had on the August, was short the 32 puts, and then long the July 28 puts. And originally I paid $2.97 for it, got out for $3.51 this morning. Just a little bit of a profit there, but it came down right there to those puts and decided to take that one off. Then in Honeywell, HON, you know, I haven't had this one on for very long. I bought the July 115 puts, and I paid $1.33 for them, got out this morning for $2.32, and I think that before I went on here, it was looking like you could easily get out for right around that anyway. Didn't move a whole lot since I've taken that one off. That's about all I've done today. I'm looking at some high volatility stocks right now. There's all kinds of them out there to be able to implement strategies. The other thing is you know, when there's blood in the water, that's the time to really get in there, you guys. Don't be afraid to start piecing in some stocks that you really like, because a lot of them are really getting beaten up and really oversold in these markets right now. So there's a lot of opportunity out there. So watch the video today, protraderstrategies.com. You can go and sign up for that because we're going to be talking about implementing poor man's covered calls. So this is going to be a perfect time to get in there and start adding some stocks to our portfolio. So it's kind of a really nice timing for this one. You know, we couldn't have expected it, but with a big sell-off, that's going to be an opportune time to start adding some overall long deltas or stocks to our portfolios. And we're going to be able to do this with a lot less margin than you would if you were going to go out and buy 100 shares of Apple, let's say. So if you really like Apple, I'm going to be able to show you a way to implement a long stock position, and then we're going to be able to lower our basis by selling some calls against it. So this is going to be a really good webinar, and great timing for it, to say the least. Anyway, so you can go to protraderstrategies.com, sign up for that. That's all I got for you today, other than if you can't take that, take it easy.